What did you make of these data? Because when I first saw them, the third quarter numbers, which was the second read, were encouraging, but then I saw the October numbers, maybe not quite so much.
Yeah, no, it's a great day when you get a lot of numbers. So let's just sort of walk through them. I think on balance, this is a good day for economic data, but the GDP got revised in some important places, most notably business fixed investment got revised up a little bit. So did inventories. That's transitory. I wouldn't get carried away with that. But this has been an economy that's been carried by the consumer. What's been missing is some strength out of the business sector. We saw a really good sales number for new homes last month, and we saw existing home sales up. We've seen a record pace since 2007 for permits and starts. So that feeds into the notion that somehow we're going to get residential construction and business fixed investment sort of picking up some of the load of carrying the economy. That's the good news piece. And as you mentioned, the non-defense capital goods were up quite sharply, 1.2%. I think really if you took out the Boeing impact from the 737 MAX, this would all look really good. I mean, there would be no downside.
So tell us about the curve, because clearly the economy is slowing down somewhat. Certainly we're not up at the 3-4% level. We're slowing down. What does that curve look like? Is it leveling out as we go into the fourth quarter? Is it going to come down some more?
I think you could easily see it tick down some more and get a fourth quarter GDP number that looks like 1.7, 1.6. There's some tracking numbers that are below 1, but I think those are too pessimistic. So we're clearly slowing down. Some of that is going to be transitory. I think we'll see some of those inventories run off, and that'll depress the fourth quarter number a touch. But I think on the whole, this economy has been remarkable. It's had taken the headwinds of the trade wars pretty successfully. It's had a big drop-off in business fixed investment that comes from both confidence and also uncertainty about the supply chains. And we're still chugging along at roughly 2%. And I think that's an accomplishment.
And how much of that is an accomplishment that just is because of the consumer as a practical matter? You mentioned earlier this issue. It's really sustained us. Can the consumer keep doing that? Does trade affect that consumer at all on their willingness to open up their pocketbook?
I think the consumer can continue to do this. I mean, let's look at the reality. The labor market's doing very, very well. Unemployment is extremely low. Wages are rising. Everyone would like faster real wage growth, and I'm in that camp, but we're still getting that wage growth. The household sector doesn't have a big problem on its balance sheet, so there's no real reason for the household sector to go south. They can keep chugging along. I don't think it gets affected too much by trade anymore. It's become sort of part of the chatter out there. You hear about it every day. And the dollar value of the tariffs, while real, isn't enough to stop it. So I think the household sector's in pretty good shape. We got to sort of look to the rest to pick it up a bit.